Hey guys, Noah Ostroff here. Wanted to give you my analysis of some proposed changes that are underway on the Philadelphia 10-year tax abatement. So as we know, there's a lot of talk about whether the 10-year tax abatement is a good or a bad thing. I think a lot of the economic data supports and the research shows that it's been an amazing economic driver for Philadelphia, but yet there's still some people that are disappointed with the 10-year tax abatement and are fighting it. So the city of Philadelphia has come up with a couple proposals. There were 6 different scenarios in which they analyzed, and this report came out in April 2018 from the Office of the Controller's Office, analyzing the tax abatements in Philadelphia and looking at what kind of dollars it would bring to the city if they got rid of the tax abatement, if they only had the tax abatement in certain zip codes, if it were a phased out tax abatement, if it were only tax abatements on properties over $750,000, and a couple other scenarios. So they looked at a few different scenarios to show the direct economic impact on dollars and cents taxes to Philadelphia. So I read the report, very thorough report, and I did my own analysis on it because I believe that report was missing a few key components of data that it didn't take into consideration. So I wanted to come at this with a different perspective. I wanted to come at it with the perspective from a homeowner's perspective, and what this would mean to the homeowners in Philadelphia if the tax abatement went away, and in terms of the affordability and what additional revenue would be lost by getting rid of the tax abatement as far as taxes to the city of Philadelphia. So, and I think there were some things that were missing from the report that I wanted to go over and analyze today. So here's what it is. So I took the data from their report. So there's currently 14,503 abated properties in Philadelphia, actively abated properties. And that goes back, some of them have 1 year left, some of them have 10 years left. That's 14,503 actively abated properties. So the value of those actively abated properties is approximately $6.7 billion. According to the city controller's report. So what I did was I divided that $6.7 billion by the total number of abated properties, 14,503, to get the average price, the average house price of the abated property. So that number is $462,349. So the average price of the houses that have tax abatements in Philadelphia are $462,349. So I wanted to look at this from a homeowner's perspective, right? So assuming that on average, a home buyer took out a mortgage, a 90% loan to value mortgage, meaning the buyer put 10% down in cash, and then the other 90% was financed by a mortgage company. The monthly mortgage payments on the average house that has the tax abatement are about approximately $2,100 a month, $2,100 a month. So assuming that every $500 of monthly mortgage payments equals about $100,000 in buying power or purchase price for a home buyer. Okay, so just remember that statistic. Every $500 of monthly payments, that's the monthly payments that somebody would have to pay to own a home, equals about $100,000 of buying power, assuming the above mortgage stuff. So the average real estate taxes on a $462,000, approximately $462,000 property, abated property, assuming land value is about 27%, right? Because the tax abatement usually on average allocates about 27% towards land value and the other 73% towards improvements. So the abatement is only on the improvements. The other 27%, which is the land value, that is still taxed, okay? So the average real estate tax on $462,000 abated property is about $1,700 per year, okay? $462,000 times 27% times what the current millage rate is, the current tax rate is as of April 2018 in Philadelphia, which is 1.3998%. So you multiply the 1.3998% times the assessed value of the property, or in this case, just by the land value. Okay, and that equals, in this case, about $1,747 per year is what the average taxes would be. So the average real estate taxes on a $462,000 non-abated property, meaning there was no tax abatement, that would be about $6,500 per year. Okay, so the difference in real estate taxes to a homeowner is about $4,725 per year, or just under $400 per month more for a homeowner. So remember, I told you before, every $500 is equivalent to about $100,000 of buying power. Well, this $400 increase in monthly payments is equivalent to about $79,000 less buying power that a homeowner would be able to buy. So here's how we did that. We took the $394 and we divided that by $500, right? We multiplied that by 100,000, because that's every $100,000. It's multiplied by every $100,000 for buying power, and that equals about $79,000 less of buying power that a homeowner would have available to them to buy. Okay, so this data that I'm looking at strictly takes into consideration just the data that was provided. That assumes the exact same number of homes would be abated, the exact same number of homes would be purchased. That also assumes that every single person that was buying would be able to find exactly what they wanted for $79,000 less, right? So all that stuff is obviously not going to be the case. It's going to be more in favor of this is not good to get rid of the tax abatement. However, I just wanted to look at it strictly objectively with the data. So that means that $462,000 price, that's the average now, would be forced down to about $383,000 on average, right? The $462,000 minus the about $79,000. So now the average price of the abated homes would be about $383,000, because remember, people, assuming the monthly, you want to try to keep the monthly payments at $2,100 a month, you'd have to be able to buy a property for $79,000 less and pay another $400 more in the real estate taxes that are going to be increased by not having this abatement, right? So this is how that reduced sales price of $383,000 has an impact on taxes. So now that we know that that would be the impact, what would that mean for taxes, okay? So $78,742 less per property, or $79,000 rounded up, times in 2016, there were 1,411 newly abated properties in 2016. 1,411 newly abated properties times, on average, $79,000 less. That would equate to $111 million less in total value of properties in Philadelphia. That's total $111 million less in total assessed property value that we have to work with. Okay, so now we take the about $111 million less in property value multiplied by the current transfer tax rate of 4.1%. That would be $4.5 million less in tax revenue that the city of Philadelphia would have received on transfer taxes alone. Okay, just on transfer taxes alone, with the lower sales prices, they would lose out on $4.5 million. Now we take the $79,000 less of buying power times the 1,411 newly abated properties, multiply that by the current tax rate, the tax millage rate in Philadelphia as of April 2018, which is 1.3998%, and that is $1.55 million less taxes received based on lower sales price. So that's $1.55 million less in real estate taxes that they would receive. So we have the $4.5 million less in transfer taxes, the $1.55 million less in real estate taxes received, and then the BIRT, the gross receivable taxes, would be $111 million less in gross receipts times the gross receipts tax rate which is 0.001415. That's another $157,000 less in BIRT, gross receipts tax received annually. So the total tax reduction that the city of Philadelphia would have in this case would be $6.3 million less, just off of the above three taxes only. Now that doesn't factor in the fact that people might not even move into the city with the higher wages. That might factor in that there will be fewer people buying houses, lowering the tax base. That also doesn't factor in the wage tax that's received from the people moving to Philadelphia. It doesn't factor in the economic impact that those people living in Philadelphia have on our businesses and our restaurants and our stores. So none of that stuff is factored in because that's subjective stuff that we can't actually calculate. At least I don't know how to calculate it. But just off of those three taxes alone, $6.3 million less that the city of Philadelphia would receive in tax revenue. Now, the report that came out from the city controller's office showed that getting rid of the tax abatement would mean another about $10 to $11 million in tax dollars to the city of Philadelphia, assuming nothing changed. So really the impact that, factoring this in, it's a positive impact of $4.5 million, assuming no other variables, which, I would argue that for sure would change. It's too big of a risk for the city of Philadelphia to take to get rid of the 10-year tax abatement for only $4 million a year. I know $4 million might sound like a lot, but in the grand scheme of what we're working with, $4 million is not a lot of money at all. There's a lot better ways for the city of Philadelphia to receive additional money for the city or cut expenses. And $4 million does not move the needle one way or the other. And it's too big of a risk for us to take for, at the best case scenario, $4 to $5 million of additional money, and the worst case scenario could be a loss for us, depending on all the other factors that I mentioned that I didn't calculate before. So, the tax abatement in Philadelphia needs to be looked at like a business, right? And more specifically, like a profit and loss statement. So with the elimination of the tax abatement, while the elimination of the tax abatement may bring in more revenue to the top line for the city, we need to look at cost of sale and expenses to determine the true net profit that the 10-year tax abatement brings to the city. So the city controller's report only shows top line revenue, right? They only shows $11 million more comes to the city by getting rid of that, but it doesn't show what we actually lose. So my report factors in cost of sale, right? My report is the cost of sale. And then the expenses would be all the other collateral damage that we can't really calculate, like the loss in the wage taxes and the support of our businesses and restaurants and other retail outlets as well. None of that stuff is factored in. Those are expenses, right? So we need to look at like a true profit and loss statement. So that's like saying in a business, that's like saying your company made $1 million but didn't have any expenses, right? This report that the city controller's office put out just factors in the top line revenue. It doesn't factor in any expenses, doesn't factor in any cost of sale. So if we approach the conversation like this and have a business conversation around the tax abatement, it might be easier to understand. So anyway, that's my take on the 10-year tax abatement. Just another perspective coming from a homeowner's perspective and the impact that it would have on homeowners. And hope you enjoyed the report, and feel free to reach out if you have any other questions or comments. Thanks.